What makes me and Serotonin and many others bullish on the space is that on-chain credit and these assets are introducing exogenous yield. Again, every on-chain credit asset is higher yielding like this. And really the risk that you just have to take on is the liquidity and duration risk.
Bringing an asset on-chain is one thing, but then making sure it's actually usable and composable and understandable for the massive user is a completely different thing.
This just broadens access to what has historically been a capital asset class that's harder to get at. That is what will unlock off-chain capital to come on-chain when they can leverage these assets in a way that's novel, that isn't as easy and accessible off-chain.
Hi everyone, and welcome to Onchain Honestly,
a podcast about what actually works in crypto as a business.
We're long-term believers in this space, and we want more honest conversations about what's changing and why.
So we explore real models, practical outcomes, and what it takes to build something that lasts.
Hello everyone. Today we're taking a deep dive into on-chain credit. Generally analyzing the market, we've really gone far beyond just crypto over-collateralized loans on Aave, Morpho, Camino, or you name it. And that's a great achievement for the industry. So we're seeing different new types of credit categories coming on chain, like institutional credit, asset-backed loans, payments financing, trade financing, and so on and so forth. And every type of credit is bringing new types of borrowers, new type of collaterals, and new interesting opportunities for investors and liquidity providers. And a few weeks back, Serotonin, one of the most famous marketing and PR agencies in this space, released a really 360-degree report on on-chain lending. And so we thought it would be absolutely amazing to discuss it in detail here on the show. And today we're joined by Patryk, Director of Research at Serotonin, and the very author of that exact report. Patryk, welcome to On-Chain Honestly.
Yeah, thank you for having me, guys. Excited to chat all things on-chain credit.
Sure. So, Patryk, maybe my first question is going to be about Serotonin and your guys' take and strategy on the research as such, because we know Serotonin as, again, the very first and one of the most famous and popular marketing and PR agencies. So can you talk a bit more about what exactly you're doing in the research field, when you joined the team, and what your strategy is in this field in general?
Yeah, for sure. As you mentioned, we're primarily known as a PR and marketing agency. So we offer a variety of marketing services, be that social media or content, also on the strategy side, branding and go-to-market. So that's our bread and butter, but now we're expanding more into research. And this was the first report that we released, which was under the Serotonin brand, serving as a proof of work of what we can offer on the research side. So we wrote this report on on-chain credit. It's a space that we believe in, we're bullish on. A lot of our clients and partners work in that space. And we tied it with social media content that went along with it, building some interest and hype for the report beforehand. Had a nice go-to-market week on the week of publication. And then I've been going on some podcast slots afterwards. So that's kind of how we're thinking about what we can offer for our clients when we think about research. So a flagship report, but also working synergistically with what Serotonin offers historically on the marketing side and the PR side as well.
So do you plan to directly monetize such reports, or is it more of a general content generation strategy?
Yeah, it's a service we offer, just like marketing or PR or growth. Um, so it's in addition to all the different services that we have. This first one was not monetized. It was just a proof of work, something we wanted to put out as kind of a public good, an educational resource, uh, establish our voice within on-chain credit as, it's a space that we work in very actively with our partners, but it's not um, something that we've been very loud about historically. So we thought that this report would be a good opportunity to establish that voice and just have a proof of work that we can point back to for when we're working on research with our clients in the future.
In my opinion, it turned out an amazing piece, very in-depth. And I think it's generally very much in line with what's happening in the industry. This increasing attention towards high quality research as such, with the recent investment of Pantera into 4Pillars, which also came as a bit of a surprise, but still. So no, I mean, it's absolutely great that you're doing it, but finally, let's start talking about the report itself. What I absolutely loved about this piece is the taxonomy and all the terms and the entire structure of it, right? Because I think it was very, very clear. So shall we start with defining the terms? Like, what is on-chain credit? How did you identify it as a term? And what categories of credit did you touch upon in your report?
Yeah. So the map might be my favorite part of the report, and maybe others as well. It got a nice reaction on Twitter when you shared it. Um, it stemmed from private credit. Honestly, we saw a lot of private credit type assets coming on chain, um, but we didn't want to call it private credit. Initially, it was on chain private credit, but as we researched and started writing this report, um, we figured that on-chain credit was snappier. It was a better name. Private credit has a negative association with it currently, and those types of assets and that risk and what's happening with the redemptions and in traditional private credit isn't really what's going on with the types of assets that are coming on chain, which we can get into. Um, but the map, and I don't know if we can share it or have it in the sources, but it's broken down into 4 categories. Those are credit issuance, capital allocation, infrastructure, and risk management. And within each of those, there's 19 subcategories. So, as you alluded to, credit issuance is the core layer where all the assets stem from. Um, so there's different types. There's over-collateralized lending from the likes of Maple Finance. There's payment finance or PayFi from Huma, Black Opal. Um, there's infrastructure finance from USDAI and Dawn. There's individual credit extension by Tech Dollar and Credit that can be unsecured or that can be backed by pre-IPO shares and stocks in the case of Tech Dollar. So um, there's a ton of different types of assets and credit issuers that are part of the stack.
Say that any of them is more developed than the others.
CAP is definitely the leader. I mean, it highlights the capital allocation or capital credit issuance category. It has over 2 billion in AUM. It's been fluctuating a lot recently with the Aave fallout, but that's definitely the largest one. And in that case, they've been around for several years, and they extend credit to over collateralized institutional borrowers. And the over collateralization stems from crypto native assets. So Bitcoin, XRP, for example. So it's a pretty secure model. Um, and that's for sure the largest one, the one with the most traction at the moment. There's also Figure. It's a partner we work with. They have a protocol called Hastra, which has the Prime token, and depositors of that are financing the actual home equity lines of credit that Figure originates. So those funds are used in the 30 or so days where a HELOC is being originated and securitized, and in those 30 days, you earn a portion of the yield. So that's another large one that has seen a lot of traction. They actually just launched their Prime token, now expanded to Ethereum Morpho. Historically, it was just on Camino with over 300 million TBL, and now expanded to Ethereum.
So where exactly they headed next, but I'm not going to disclose them now. Yeah, I have been following Figure for quite some time. Super curious about the product itself. But then maybe like just generally, so it's essentially about this off-chain credit, right? So Figure, you put it into the, I think, off-chain credit category, right? And then Cap was in on-chain origination. Talking about broadly like categories, where have we seen most growth at this point?
Yeah, so there's 4 categories under credit issuance. You mentioned on-chain origination, so that's capital being pooled directly on-chain. Um, USDAI, Maple Finance, CAP, Astra, all these protocols are sourcing capital on-chain and then extending credit with those funds. Institutional funds are another subcategory. These are tokenized institutional credit funds. So you think of Janus Henderson's JAAA or Apollo's ACRED. Um, these are more simple. They're off-chain funds that are being tokenized. And the hope is in the future they can serve as productive collateral. Um, you can loop potentially if you're willing or wanting to do that. There's about eight or so of those types of credit funds that have been tokenized. Then there's tokenized off-chain credit, like you mentioned. So Figure is an interesting example where they are using blockchain infrastructure and tokenization to make their business more efficient. So they've been able to cut out around 120 basis points in per loan cost when they originate HELOC. So that's very compelling. They can obviously increase their bottom line through that. They can uh, cut borrowing costs for borrowers, and that's one model. But they also have that Hastra protocol, like we mentioned, where there's an on-chain component to funding that business. Other players in the tokenized off-chain credit uh, category are folks like Falcon X and Rockaway X, where there are vaults where on-chain capital can directly lend and provide credit to those institutions that they then use in off-chain strategies. It could be them extending credit off-chain. It could be delta neutral strategies, but the capital is coming from on-chain and going to those borrowers. And then the last category in credit issuance is peer-to-peer lending. Included this one, something like Wildcat, where there's a single borrower and capital is, again, being sourced on chain. And a borrower like Wintermute can tap into the capital and use it for their own strategies. So those are the four categories under credit issuance that we covered.
Talking about capital and liquidity, there's obviously reasons why, all of these products are moving on chain, but what's your opinion regarding any product genuinely creating new liquidity, or rather it's just repackaging, existing mechanisms? So in a gist, it's a better bookkeeping, or do we actually have more liquidity?
Yeah. So I would say right now it's a lot of crypto native capital that's being allocated to these on-chain credit assets. Um, what makes me and Serotonin and many others bullish on the space is that on-chain credit and these assets are introducing exogenous yield. So historically, it's been a lot of circular demand where there's a new protocol and on-chain capital shifts to that. And then if there's a bear market, all yields go down and just borrowing demand goes down. It's very cyclical, and that's what it's been like historically. But on-chain credit and these assets and these yields are tied to something real, right? Whether that's HELOCs or GPU financing or trade financing. Um, these sources of yield are not tied to the broader crypto markets, and they're generally higher yielding opportunities. So um, I think new capital is slowly coming in. And when you have the ability to borrow against these types of assets or loop them in a way that's a lot easier than it is to secure financing against an off-chain asset like that, and then let alone loop it, it provides a compelling opportunity for off-chain capital to come on-chain to take advantage of those opportunities. And we're in the process of um, integrating these assets as collateral, having instant redemptions so that you can loop them, because a lot of these assets have longer redemption periods. So there's folks like 3F and Grove just announced yesterday, Grove Basin, where they're going to be providing instant redemption for assets like JAAA in the future. So yeah, right now it's a lot of crypto native capital. In the future, I think more and more capital will start allocating to these types of assets.
Exception here is institutional credit, right? Because anyway, what they're packaging into this on-chain products now is offered to accredited investors of the same Apollo, let's say, which is the largest asset of the category right now. But again, as you've mentioned, once we make sure it can properly be used as collateral on lending protocols, this is going to be much more interesting. And then there is the other side of it, which are liquidity providers that are essentially putting their stable coins into the pool and kind of tapping into that yield as well on the other side. But why do you think we haven't really seen enough growth there? Because again, if we look at the TVL of those pools on, let's say, Aave Horizon, it's still pretty tiny, isn't it?
Yeah, it is. Aave Horizon actually doesn't have uh, really any on-chain credit asset activity. They have a AAA.
Yeah, they did put it like as a pool, they did create it. Now it's not active, like as I
So
checked.
yeah, in terms of on-chain credit, it's active broadly, but the only on-chain credit asset, the way that we've categorized it, is JAAA that's included in Aave Horizon with only around $2 million TVL. So a lot of the activity is actually on Camino and Morpho, which have hundreds of millions of dollars collateral and also supply side liquidity allocated to on-chain credit markets. Um, they're going head to head right now. It's about like 300 to $400 million in on-chain credit collateral that's deposited in each of these. Those being Finance, USDC, there's also Prime, um, Huma Finance, Fasanara. So these assets are growing as productive collateral. Um, and yeah, what's been holding it back really is the liquidity side. So being able to liquidate, have a liquidator be willing to liquidate these assets in the case that a borrow position needs to be liquidated because that can't redeem it immediately. They need to wait a month or 3 months, and they may not be willing to take that risk. So really, it's been the liquidity side that's been holding back the money market side of things and the growth there.
Maybe it's platforms to obviously resolve this issue, and as you said, 3F is working on in that direction as well as Centrifuge. I think they've just recently announced, apart from this great integration like partnership with Coinbase, they're also doing this liquidity buffer or something, which would also help on that side. So I mean, the trend is obvious. We just probably need to wait and make more experiments on that side. And then, Patrick, going back to those categories that you've mentioned, for each category, I'd say there is a particular benefit of bringing that type of credit on chain, right? So on the borrower side, it's obviously like access to faster, cheaper credit. Opportunity costs are much lower here, right? Because they don't need to wait till the credit is originated, etc., etc. So let's talk maybe a bit more about the other side, the yield side, the investors and liquidity providers side. I know that you were particularly excited about all these looping strategies on Camino, etc. So can you maybe talk a bit more about it? Where you're seeing most growth, like which assets have we really managed to bring into DeFi properly?
Yeah, the yield side is some of the most exciting. Every on-chain credit asset that I looked into, the yield was higher than the base DeFi lending rate, which of course is a low benchmark right now. It's very low, lower than US Treasuries even. Um, but on-chain credit, for example, Apollo's ACRED yielding around 8%, CAPS, SDC, USD yielding around 8% as well, Prime 7.5. So these types of assets are generally higher yielding. And of course, there's certain risks that come with that. Um, but that is the opportunity, right? That these yields are exogenous. They stem from outside of the crypto ecosystem. Um, and you're seeing a lot of activity on Camino, on Morpho, um, Prime, for example, that base yield of 7.5%, you can loop that up and boost it to over 20% if you'd like on Camino or a loop scale. So that activity is happening on money markets. And again, every on-chain credit asset is higher yielding like this. And really the risk that you just have to take on is the liquidity and duration risk. Because again, it takes a month, 3 months in some cases to get your money back and redeem these assets.
But maybe you can also comment on what other types of risks there are on top of this, like being difficult to be liquid, because these looping strategies also come with certain risks, and for institutional players, the whole word risk is a very topical.
Yeah, for sure. So there's several different types of risk. I mean, there's credit risk. That's the base one. This is on credit, right? So if the credit that is extended, the borrower defaults in any way, or the asset backing the credit is no longer valuable or not as valuable, there is potential to have losses, right? And that's the fear that's going on right now in traditional private credit, where folks are afraid of the AI boom and different software companies that have either invested heavily or are potentially going to be disrupted by the emergence of AI. The fear is that they may default on some of these loans that they've taken on. And that's why a lot of these redemptions are happening. And you're seeing uh, traditional private credit funds cap redemptions and, typically at 5% per quarter. Um, so that is one risk. It's not a risk that has materialized in on-chain credit, which is why I'm of the opinion that it's a little overblown. Um, when folks say, on-chain credit shouldn't be happening because they're just dumping private credit and on-chain capital will face defaults or something like this. But again, there's only around 8 funds that have been tokenized. None of them have seen. One of them actually has seen losses. It was around a 2% loss in NAV, which was Fasanara's MF1 fund. That was stemming from a borrower that committed fraud and had double borrowed. So there was a loss there. So of course, credit risk is present. That's something that can happen. But
There was another one on Nest, which I personally experienced.
Which one
A
was
wisdom tree. Wisdom tree.
yeah, so that's another one, but it's a little bit different. So those are the 2 cases that I've seen on-chain credit assets draw down. In that case, though, that is a tokenized index. So it's an index of credit. So it wasn't an individual fund. It was just broad exposure to the credit market, and um, it's a little bit of a different case, I would say. Oh yes, you're right.
Negative yield, it can definitely be, understood and taken into account. But yeah, that happens. It's a thing about just general education and understanding what exactly you're investing in, and again, understanding the risks fully. But Patryk, by the way, talking about the origination itself, right? So we all understand that origination happens off chain still for all those, like most of those products, right? That you've seen in your report. Can we maybe talk about something new happening in the market where we may see on-chain origination and on-chain underwriting, and what models have you seen in this niche?
Yeah, definitely early days in terms of bringing the broader credit origination process on chain. There are parts of it that are happening on chain. Um, Valinor is an exciting one. They just raised uh, 20 or $25 million a couple months ago, and they're trying to re-architect the credit origination process to be on chain. So using blockchain for underwriting, for loan repayments, for uh, loan health, and having that be transparent. And it's still early days. I'm still trying to learn myself what exactly they're building, but that is their vision. Realo is another one. It's a purpose-built blockchain that's focusing a ton on the origination side. So um, trying to implement features in their blockchain that make it possible to maybe have documents live on chain or have be verifiable on chain, so that you can have this credit origination process happening off on chain rather than having documents live off chain and you don't know what the health of the borrower is. You don't know when payments are happening because they're happening off chain. So bringing that broader process on chain is the vision for some of these earlier stage startups like Realo and Valino. Um, but we haven't seen it play out yet. I think it's still a little bit early where only parts of the credit origination process are happening on chain right now.
So I mean, we can also remember such protocols as 3Jane, right, and Divine Credit, where they essentially try to score your activity on chain, and then based on that, they would allow or not allow you to take a loan on the platform. What do you think about those? How do you assess the success so far?
Yeah. Yeah, those are 2 great examples. I really loved learning about them and writing about them. 3Jane actually just announced an expansion to their products. And they're known for, yes, taking on-chain holdings. You can also connect a bank account. I believe if you want to strengthen your credit worthiness, um, and then they provide unsecured loans based on your on-chain holdings and off-chain holdings. Um, so that's been a cool model. It's not a massive space. I think around 10 million or so in TBL. So it's still quite niche. Credit as well, around 3-4 million in TBL, where they're doing something similar on World, um, extending unsecured credit to individual borrowers. So I think those are interesting models. There's a couple of startups on base as well in that space. Um, 3Jane just announced that they will be doing financing for institutional borrowers. So still learning about that. Yeah, fintechs where kind of similar to Pareto, it's a vault infrastructure protocol where, again, like Rockaway X or Falcon X, people on chain capital and they borrow that to deploy their own institutional investment strategies, right? So something similar to that is what 3Jane is going for, but on the fintech side.
By the way, thank you so much for your deep dive into Pareto. I did not know about that protocol before, and yeah, thanks to you, now I know.
Yeah, they're great.
They are. So yeah, essentially I think we should differentiate from, like pure on-chain origination as well 3Chain and Divine Protocol are trying to do, again, with this small TVL, as you mentioned, and then just kind of enhancing origination through bringing different documents on-chain, like you could do in, trade finance or payments financing. That's really cool. But again, it's not really about the replacement of the origination system, right?
Yeah, so it's parts of it, right? Like whether it's having something regarding the asset that backs the credit being on chain, like USDAI, they have an NFT that represents the GPU that backs the loan. Um, or you can have repayments being made on chain, which are trackable, and you can see those being made every month, and highlighting that the loan is generally healthy, it's being repaid. So there are portions of it happening on chain. Um, but again, there's just a couple startups that are trying to bring the entire process, absolutely everything basically happening on chain. Um, so yeah, bullish on the credit issuance side. I think that's only going to continue to grow. And particularly what's interesting to me is the more crypto native, DeFi native, where things are mostly on chain is what's exciting. And it broadens access to everyone, right? Anyone can hold Syrup USDC or Pool Capital at USDAI. So this just broadens access to what has historically been a capital asset class that's harder to get access to.
Are there actually any on-chain credit products that you use?
Either
Yeah,
borrower or lender side.
yeah, for sure. I'm active on chain, doing things, experimenting. Of course, I was writing the report, so had to play around with some protocols. Even before the report, I had some capital in USD AI. That was one. Um, During the research process, I decided to get some Prime and loop it on loop scale. So play around with that process, see what it's like. Um, those are the two main ones that are coming to mind. Also, Cap is another one. Um, have some funds on there. So yeah, using these protocols.
Yeah, no, I can relate. I'm a great fan of Prime, and also, yeah, was using loop scale, and I was told that I'm like one of the only people that use loop scale, and I was like, what? No, like the yield was much juicier than on Camino back then. So anyway, and on the borrower side, like, do you use any lending platforms at least, Aave or Camino?
Not Aave. I've never been a big Aave user. I was back at my time at Masari. I was a big L2 guy, so I was using more so Morpho, Aerodrome, Camino for sure on the Solana side. Um, so yeah, more so Camino and Morpho than Aave, but yeah.
I think it's very important to be hands-on because, again, I'm afraid that a lot of people who are in the RWA tokenization space do not, unfortunately, use those products themselves, and they don't really understand, where the challenges are coming from, what the real problems are in terms of UX, UI. Because, again, bringing an asset on-chain is one thing, but then making sure it's actually usable and composable and understandable for the massive user is a completely different thing. Anyway, Patrick, what's next for on-chain credit? What are you expecting in the near future? A couple of trends.
Yeah, I would say the liquidity side again. I keep harping on that, but it is the liquidity, instant redemptions, are truly the thing that's holding back on-chain credit and have held it back. Crypto is instant. Everything you're able to move around whenever you like, swap it, exchange it. But these types of assets come with some level of duration, right? You can't just liquidate your traditional private credit asset. There's a waiting period that you have to redeem it. And so as these assets have been tokenized, that's been the issue with integrating it with DeFi. And you're seeing a lot of activity this year with liquidity protocols like 3F, multi-liquid, Fission, now Grove, Centrifuge. All these players are striving and battling to solve this problem so that on-chain credit assets can be used productively across DeFi. And again, to the earlier point in the pod, that is what will unlock off-chain capital to come on-chain when they can leverage these assets in a way that's novel, that isn't as easy and accessible off-chain. So the liquidity side is what I'm excited about and what I think will enable the next wave of growth of on-chain credit.
Shall we expect like kind of a next edition of the same report after some time? Or what are your plans in general for research at Serotonin?
Yeah,
If you
for
could
sure.
maybe unveil that curtain for us so that we can monitor and have a look at your next pieces.
For sure. I had a great time writing this report, so I would love to make a second version. With this data report, it's a lot of effort, and I think it's a great resource. So it stays helpful for a long time. Maybe sometime like this year or next year, we can do a follow up, a new one. We'll see. No plans for that right now. It's still early. But that being said, Serotonin is very focused on on-chain credit. So I will continue putting out content related to on-chain credit. Um, right now, we're putting out shorter primers on key players in on-chain credit. So you could follow myself or Serotonin to check that content out. We just put one out yesterday on Infinify. The next one will be on 3F. So trying to continue that momentum. And then later this summer, we'll start doing more client work. So kind of how I mentioned, this white labeled research where um, we're working with our clients and partners to put out research under their own brands, powering some of the social media work that we do and PR work. So yeah, I'm sure myself or the Serotonin account will be sharing the research that we come out with.
Cool. So it's high time people started subscribing, following. We'll definitely share all the handles. And Patrick, thank you so much. It was a pleasure having you, and we hope to stay in touch.
Yeah, thank you,
Thank
Kasia
you
and
for
Monica.
coming.